Twitter CFO Ned Siegel joins me now. Ned, it's great to see you this morning.
Thanks for having me.
We're happy to have you. The big question is, how are you going to double these sales by 2023?
Well, there are a lot of ways that we can double sales when we think about this massive market opportunity we have around digital advertising. There's over $150 billion that's immediately addressable to us that through our brand ads, through our direct response roadmap. We recently relaunched our website Clicks product and our app install or map product. And we'll keep moving all the way down the advertiser funnel till you can buy something on Twitter. That's going to be a really important path, but so too is helping small and medium businesses who historically have had big presences on Twitter, but haven't advertised as much. They're only 15% of ads revenue today. There are many other paths as well. You alluded to a couple of them. We think about subscriptions as an important opportunity for us over time as well. We're moving a lot faster. We're really innovating, and we've got a bunch of paths to get there from here.
So Ned, based on that, it does seem as if advertising, though, is still going to be the key factor that is going to take you to a doubling of those sales in just a few years. When it comes to subscriptions, how does this new product fit into that, and how much of a boost do you think it will be to your overall sales?
Well, it's too early to say how exactly subscriptions will play out, but I'm really glad you talked about super follows as an example, because sometimes we'll do subscriptions where the idea is really to put money in somebody else's pocket. We want content creators to bring their very best content, things that are unique to the conversation on Twitter that their followers will find incredibly interesting and that their followers will be willing to pay for. And in those cases, we're really going to be facilitating a transaction. We hope to have more out around that later this year. Kayvon talked about it yesterday. We're really excited about it. There are other kinds of subscriptions.
Ned, let me just jump in very quickly. Does Twitter take a cut on that $5 a month subscription service?
Well, we haven't talked about the economics yet, but remember, we did acquire a company in January called Review, which has a newsletter subscription service. In that case, 95% of the proceeds actually go to the content creator. So that gives you a sense for something that's out there that we own, where we're really trying to put money in the hands of the content creator. If we can do that, it's great for Twitter. It's great for the people who use the service. It will bring more great content to Twitter. So not everything has to start with how do we generate more revenue. Sometimes it's about how do we create a great experience for people on the service, because that ultimately will ladder up to revenue.
Obviously, President Trump no longer on the platform, permanently banned from it. And I know Twitter saying just a few weeks ago that even if he does decide to run for president again, he's still not going to be allowed back on the platform. How does that factor into your financial outlook?
Well, as you may remember from our earnings report a couple of weeks ago, we mentioned that in January, we added more monetizable DAU than the average of the last 4 Januaries. And so that's a really powerful reminder for people, along with the fact that we said we think we'll grow DAU about 20% this quarter against tough comps last year, that Twitter is more than any one account, it's more than any one topic, it's more than any one geography. There's so much great stuff happening on the service, and the January's results, I think, are a powerful reminder of that.
It was not too long ago, just a few years ago, that Twitter was considered a potential acquisition target by a company like Salesforce, for instance. And now the stock near a record high. Obviously, you have ambitious plans ahead. Are you looking to acquire other companies at this point?
I'm so glad you asked. We've actually acquired about 20 companies for hundreds of millions of dollars over the last few years, because it can be a great way to attract incredible talent, bring great technology and important products to our business, and to help us accelerate our existing priorities or sometimes expand our existing priorities. When we acquire companies, it's interesting, the retention rate for the people who come to us through acquisition is actually higher than the retention rate for people who we hire through other paths. That tells you that we're finding the right people, that they're aligned with our purpose, and that they fit in really well once they get to the company.
When it comes to content, are there new ways that content can be integrated into your platform to drive sales?
Well, there are a lot of ways that we can continue to help people serve the public conversation on Twitter. Remember, we started with 140 characters in text messages, and then we added images and more characters and video and live video and audio tweets. One great new product that is in beta today that I played around with last night that I can't wait for people to see is called Spaces. These are audio chat rooms. I can't think of a better way to extend what we already do around serving the public conversation than give people the opportunity to participate in or listen to people talking about a topic that's interesting to them and tweet alongside it and follow it because of their interest graph and be found because somebody else has a big set of followers who they know are already interested in that topic or interest.
Ned, before we have to let you go, super follows, obviously a focus as we've been discussing throughout this interview. More of those details announced yesterday. Do you anticipate that there will be any animosity or tensions with that unrolling of that feature with publications? Obviously, journalists can make money on their own with that feature, perhaps at the expense of publications. How are you planning to manage that?
Well, we're excited about how people will learn with us the best ways to roll out premium content on Twitter. Sometimes this will be a freelancer who has something important to share. Other times it will be somebody in the entertainment industry who wants to give something to their fans that's unique from what they might be able to find somewhere else or in the tweets that they're already sharing with the whole world. And it'll be an important path for people to learn about the news that's happening in the world too. And we'll have to learn through that with journalists, and I'm excited to see how it all plays out.
All right, the stack up 2% today. Investors clearly like it. That's Twitter's CFO, Ned Siegel. Ned, thanks so much. You'll have to join us again.